Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, April 29th, 2009. Well, we're seeing another up day on Wall Street, folks. We had a hard sell-off into the close yesterday. You can see that on the charts from really hitting this resistance area on my charts. And again, these levels are the current levels, the exact levels that we've had in our charts for any period of time, going back as far as weeks to months, that have been intricate in this market. Now you can see how yesterday the market rallied up. It was actually a fake out breakout, went right to our resistance line and then rolled over. Now the market today gapped higher. Now why did it gap higher? Well, we had some positive issues. It looks like this flu possible pandemic is not turning out to be what people thought possibly. There has been one death, unfortunately, but the only other issue is it's not spreading like people had once feared, so that is giving the markets a little bit of a boost. In addition, you have constant price pressure on the market from ExxonMobil, which is a major leader in the markets, along with oil commodities. Commodities are moving higher today again, which is helping the markets, and Goldman Sachs is also pushing up. That compilation, that overall effort to push the markets up is really helping very much so on getting these indexes higher. Now we're seeing the Dow up about 155 points today, the Nasdaq higher by about 39, and the S&P up about 17 and a half. Really, that's about 2% across the board, which is a fantastic gain. Now, this morning we had the GDP number. The GDP actually was slightly worse than expected. It caused an initial reaction to the downside, but very, very quickly on the open, the market rallied higher and has just gone straight up. The one thing I find very interesting is if you look at the charts over the last 3 days, the same patterns developing from the start of the market to really around 11 o'clock. And what you're seeing here, look at today. So we had basically a gap up today and a move straight up till about 11 o'clock where you start to falter and pull back a little bit. Look at yesterday, gap down, but the same up move happened. Where did it go? Right till about that 11 o'clock time frame. If you go back to Monday as well, same thing, gap down and rise right into the 11 o'clock hour. So you're really seeing that happen. The real question mark is what happens the rest of the day. All right, the last couple days we've seen sell-offs late in the day, or at least starting around lunchtime on Monday. Tuesday we saw a nice little sell-off in the 3 o'clock hour. Today the question will be is what does the Fed do? The Federal Reserve is coming out with their FOMC policy statement and rate decision at 2:15 p.m. Eastern Time. Now volume has dried up, and that's a key for this market. Remember, they're not going to be able to sell this market off with no volume. That volume will come back in a major fashion at 2:15 p.m. Eastern Time when they announce their decision and their statements. Really, it's all about the statements. We know they're not going to raise rates or lower rates. It's all about what do they say about the economy. Now, those of you that have been watching this market, watching our videos, know that as of now, the government, the Treasury, and the Federal Reserve has been very, very positive for the markets. Ever since really beginning of March, things changed. All of a sudden, Obama became a friend of the markets. The Treasury Geithner became a friend. Bernanke became a friend. So the market constantly is looking towards more positive news here from the Federal Reserve, which is part of the reason I believe that the markets are trading higher into this today at 2:15. However, the other thing to remember is declining volume. We all should know this by now. Generally means an up market, and that's exactly what you're getting as well, leading into the Federal Reserve policy statement 2:15 p.m. Eastern Time. Now, once you get that statement, folks, there's going to be a move in the market. Whether or not it's down or up is up in the air. We'll have to analyze the charts previous to that. That's what we're going to be doing in the chat room, our live video chat room, where you're looking at our charts live as we analyze, trade, give play-by-play of the markets, answer questions, you name it. That's what we're doing to our premium subscribers in the chat room as they're looking at our charts, and we're dissecting various stocks and ETFs and markets. Now, the one thing I will say here, folks, you can see my levels. The level's working perfectly again. Look at the gap up this morning. Gapped right into the high from yesterday. First candle closed above. As soon as you see that close above a major level like this, you should be able to surmise that the market's going to go higher. Sure enough, it does that exactly. Where does it go? Our beige trend line, pinkish trend line right here. You get a one candle pause on it, then the market rips higher. Again, pausing right here at the white trend line and then going up to this level. Now, this level is a very, very important level. Why? Because this matches up with the level from 2 Fridays ago highs. All right, and that's what we traded up into. That's what we pulled back off of. This is major resistance right up here. If that gets taken out, then you do have some upper resistance levels, but again, we're going to save that level to watch for our premium subscribers in the Research Center videos at night that we put out for our premium subscribers. Again, those videos, plus minutes long every night, diagnostic on the whole entire market, SPY, NASDAQ, whatever it may be, all the markets, all the oils, the gold, dollar, you name it, we're covering it. The stocks like Goldman, Apple, we will cover all the pure technicals on that, everything we follow, which is price, pattern, time, and technical trendline analysis. Now, one thing I want to show you here, folks, is notice how the market's getting a little bit of an upswing here. No volume right here in this market, but notice what it's coming off of. You came down right above this yellow, white trend line. Also, the 20 moving average sloping up. That's giving the market a little bit of boost. And you just have to know these levels. You have to understand how this market works. If you can do that, you will trade 10 times more effectively and be much, much more profitable in your trading. It's just as simple as that. Again, guys, the important thing to remember is this applies to all time frames. If you're a swing trader, an investor, a long-term player, all these patterns happen on the daily charts, the weekly charts, the monthly, as well as the intraday. I just give you guys a taste of the intraday on these videos to give you a sense about what we do in the nightly videos in the Research Center, Pro Trader Watch List included, all the rest of those services. You can check them out on our website. I don't want to spend much time on that. Okay. Again, notice the float higher. Now, the question will be is, do we go back to a double top into the Fed? This resistance level, again, at around 87.60, 87.65 will be intact. That'll be resistance at a double top as well as the high print here on the trend line. If we don't reach that high, this pattern could be a bearish pattern. We'll have to see how this plays out, but on the 10-minute right now, this could be a slightly bearish pattern developing, which could yield a breakdown to the white trend line at around 87.20 or so. All right, if that starts to break and you break the white trend line, you could be in trouble here all the way down to this beige trend line at around 86.90. That would be the next thing to watch. As of now, this is slightly bearish pattern only because of the pattern involving off this move down. All right, this would be an in spirit of bearish flag pattern developing. If you start to break up and make a high double top, well, then that's resistance up there, but it negates the bearish pattern. And you have to remember that. Yes, it's a double top, which is a pullback opportunity, but a double top would negate the bear in spirit of bear flag pattern. It's very intricate, very isolated here on understanding these rules, but that's why we put out the videos every night, guiding our premium subscribers and really identifying and teaching and educating them to the best of our ability so they understand what to look for and can do it on their personal stock picks, whichever they wish. Okay, now let's go to the 60-minute in a minute. I want to show you how it's actually interesting here. This pattern right here is actually a bullish pattern on the 60-minute. And this is where it gets interesting because a time frame on the 10-minute basis could show a little bit of a pullback coming maybe, but at the same time the 60-minute could show an up move coming. And again, the bigger time pattern gives you the bigger move. So that's really the question here, what we're going to have to follow. Now again, could that bullish pattern on the 60-minute that I'll flip to right now, and here it is, you can see nice up move, sideways consolidation, inside bars in spirit of, or a bullish flag pattern right here. That could be telling us a move up could be coming as well. However, again, it's a wild card going into the Federal Reserve today. This market had a nice move off the lows, gap down yesterday, and is still continuing to be very, very strong, especially on that hard pullback yesterday. We've recaptured the 20 moving average. These are your trend lines that you're watching, and you can see your upper trend line right up here as your resistance right around that 87, 60, 65 level to watch. Now, again, the one thing that can happen is, remember, we're still got a good hour left until this Federal Reserve meeting. This pattern could change as well. So, again, that's why it's so intricate to understand and be able to isolate it for yourselves, and that's what we're going to be doing in the chat room, as I said, and the nightly videos go over all the patterns for the next day on the daily charts, the weekly charts, and so forth. Okay, so keep an eye on this pattern here, folks. As of now, this would be considered a bullish pattern on the Spider 60-minute, while, again, the bearish pattern here is there on the 10-minute chart. Levels wise, on the downside, obviously we talked about the downside and the upside. That's what you're keeping watch of. But again, it's going to be interesting to see because what we've seen over the last few days is late day selling, and that late day selling has been pretty powerful selling. At some point, we seem to get the increase in volume. Whenever we have light volume from really the start of the day through the midday hours, you're getting the float higher. Then once we start to get late afternoon volume, and it starts to sink this market. And the question is, do we see that again today? We will have a lot of volume coming in this market at 2:15 p.m. Eastern Time with the Federal Reserve. The other thing to watch tomorrow morning, ExxonMobil earnings. Exxon really one of the main leaders in this market with Goldman Sachs. If you want to know what the market's doing, just look at those two stocks. If they're both up, you can almost bet with almost a 99% certainty the market will be up, and vice versa. If both are down, most likely the market is down. All right, folks, that's all for now. We encourage you to come join our webinar this coming Saturday. We have a new webinar date posted on the website. You can check that out. The methodology will be revealed. All our hardcore counts, anything that we don't even discuss in our videos will be dissected and taught, as well as the Research Center, which includes everything under there on the website, inthemoneystocks.com, and the chat room. Have a wonderful day, folks. Thank you as always. Take care.